Hey everyone, Sean here at Warrior Trading, and today we're going to go over Bollinger Bands and how they can be used to trade with. So what is Bollinger Bands? They are a technical indicator that was developed by famous technical trader John Bollinger, and they are used to measure volatility based on standard deviations. Bollinger Bands consist of a middle band, which is typically the 21-day simple moving average, that is bracketed by an upper and lower volatility band to signify overbought and oversold conditions when prices reach these outer bands. So the Bollinger Band components, when you plot it on a chart, this is what it's going to look like. You're going to have your upper band, you're going to have your mid band, and you're going to have a lower band. What you'll notice is when a stock has consolidated for a while or trade near the mid band for an extended period of time, the outer bands will tighten up, which you can see is happening right in here. When the stock is volatile and has moved away from the mid band, the outer bands will start to expand and indicate that volatility is picking up in the stock. The outer bands are based on a standard deviation, so let's go over standard deviation real quick. A standard deviation in stock price terms is a movement away from the normal distribution of prices. So looking at the standard deviation bell curve, you can see that 68% of the time prices will be within one deviation of the average, and 95% of the time prices will be within two standard deviations. So what that tells us is when stock prices get far away from their average price range, they are more likely to revert back to the mean, and is why Bollinger Bands can be a great tool for finding overbought and oversold conditions. I have my Bollinger Band set at two standard deviations, and according to the bell curve, that means that prices are within those deviations 95% of the time. So I know when prices are outside the outer bands, then we are more likely to see some kind of pullback or retracement. That doesn't mean that I'll look to take a reversal trade just because prices are outside the bands, because stocks can trend for multiple days. But especially with less volatile stocks, I know that prices can't sustain staying outside of these bands for too long, and the longer they remain outside, the more likely the chances are for a reversal. So that's what standard deviation is. So let's go over a couple strategies here. This is a Bollinger Band momentum trade that I like, and basically what you're looking for is tight consolidation, as you can see here in Apple, and then you want to see a break above or below the outer band on increased volume. So we have this tight consolidation, and we're looking for a breakout, which we got here on increased volume, and then we had a nice run up following that for a nice little momentum play. The way you want to manage it is you want to get in once you get a close above the outer band and confirm it with the high volume. And I like to use the mid band as my stop, but you can use the low of the consolidation or whatever works with your trade plan. So once you get in, you want to look to take your profit based on your risk reward ratios, 2 to 1, 3 to 1, and you like to follow it as much as you can outside the bands. And usually I'll take my trade off once I get a close back below the band, one of the outer bands. So this is a good momentum trade for using Bollinger Bands. Let's have a look at reversals. So what you want to look for in a Bollinger Band reversal is a strong move with a close outside of the band. So we had a really strong move here, had closes outside of the band on high volume, but then you want to see a candle close back below that outer band on high volume again. So here we had this really nice strong drive up. We got some closes above the outer band, and then we had a really strong volume day that closed back below the band again. So what you would do is look for a short once the band closes, or once the prices close back below the outer band, and look to cover as it comes back down into the mid band here. I usually place my stop at highs, so would have been shorting right around in here, had my stop up in here at highs, and then would have been looking to cover in this area. And usually I'll leave a little bit of a position on, move my stop to break even, and look to see if I can get a move down to the bottom band here. So this is a good reversal pattern to look for when using Bollinger Bands. And some trading notes when using Bollinger Bands. Trading with Bollinger Bands work best when you use other indicators to confirm signals like oscillators, support and resistance levels, and volume. Also, Bollinger Bands are a great indicator for determining how volatile a stock is. And finally, during strong trends, prices can stay on or just outside the outer bands for an extended period of time. And this is important to note because when you're trading reversals, you want that confirmation of that bar to close back below the outer band because they can easily stay outside and trend for a long period of time. So that's some trading strategies with Bollinger Bands. If you have any questions, let us know in the comments below. All right, see you guys next time.
Oh hey, I didn't see you there. Well, I was just working on the dream board for my next home run trade. Hopefully it comes soon. Until then, make sure you subscribe to get email alerts anytime I go live or upload new videos. Until then, happy surfing